Well, our next guest says we are seeing the decline and fall of investment banking. Ivy League grads are now turning their backs on Wall Street careers, given what has happened since the financial crisis. Now, joining me now to talk about this trend is Bloomberg View columnist Bill Cohan. Bill, I enjoyed your column on this, and I say it a bit that, it was a bit tongue-in-cheek in your column when you were saying, look, these grads are going to teach for America versus Wall Street, but that really is happening, right?
Well, it is happening at Goldman Sachs. I'd heard it happening anecdotally, and then yesterday after the column ran, I did receive emails from people whose children, in fact, have gone to teach for America instead of Goldman Sachs. I don't see it as a particularly threat to Goldman Sachs per se. There'll still be lots of people who want to go to Goldman Sachs.
Right.
There always are. Every time I go to a college campus and speak, I'm overwhelmed with people who want to know how to get a job at Goldman Sachs, and that's recently. But clearly, people are starting to vote with their feet. The numbers of people going to Wall Street are down, and the people willing to go to even teach for America instead of Goldman Sachs are rising. So it's very interesting, Betty.
So what is it? Is it the prospect of making less money on Wall Street? Is that what's behind this?
I think it's becoming an ethical and moral choice. I think that a lot of Wall Street did not acquit itself particularly well in this financial crisis, and more evidence of the things that went wrong and that were not done properly continues to come out every day. And this is now, what, 3+ years after the crisis began. Some would say 4 years. And so it takes a while for, as we all know, to build up a reputation and not very long to destroy it. And I think that, between Occupy Wall Street and which has taken hold on college campuses, of course, and just the general feeling that business is down and salaries are not going to be what they were, and that just the number of slots open for people to go to Wall Street is reduced. I think the combination of all of those things means that college students who are very smart and savvy are starting to vote with their feet a little bit.
Right. So here's the problem, right, Bill, is that you've got, tens of thousands of layoffs on Wall Street, or maybe even more, since the financial crisis. And then at the same time, maybe some of the brightest minds are not going to be on Wall Street, which leaves these banks and these firms with what?
Well, I mean, look, the Bloomberg News estimated that 200,000 people are going to lose their jobs on Wall Street worldwide. They always need junior people down at the bottom of the food chain. So they'll continue to recruit on college campuses, but it's just not, it's probably going back to a more normalized appeal as a place to work. I mean, for the last 25 years, Wall Street has become a black hole of talent. I mean, people from all over, the best and the brightest, always wanted to go to Wall Street. They wanted to make as much money as they possibly could, maybe pay off some student loans. And I mean, it all made sense. I mean, why not go to the place that's going to pay you the most money? But is that the best thing for society as a whole? And I think now we're getting back to a sort of calmer, more rational approach where people who really want to go and do the work that you can do on Wall Street go there, as opposed to just everybody hoping to make, a pile of money to, pay off student loans or do whatever it is they want to do with that money. So I think it's rational. I think it's smart, but you're seeing a new little mini trend. We'll see if it continues and whether or not Wall Street will still be able to attract the best and the brightest.
Right. Well, and talking about the money, I think a lot of them are going to be getting their bonus checks or going to be getting their bonus notifications this week and have in the last few days. How much of a cut do you think we're going to see on Wall Street?
Well, I think the long-term trends here, Betty, are not very good if you want a big compensation package on Wall Street. The biggest expense of every Wall Street firm is compensation and benefits. And if you're in a struggling profit environment, as many of these firms are in, it's just not looking like the robust profits of the days past are going to return anytime soon. The easiest thing for you to do is to cut compensation and benefits. So I would expect very soon that many of these firms are going to cut those numbers down considerably. But let's face it, Betty, even if people got paid half of what they got paid before on Wall Street, they're still making more money than they can make anywhere else. So I think that the long-term trend is that compensation on Wall Street is going to come down, but it's still going to be almost more than you can make anywhere else.
Very true. All right, cutting from a very high base, so to speak. All right, Bill, great to talk with you. Bill Cohan on Skype there, our Bloomberg contributor.